back to ET Now. You're watching Buy Now, Sell Now with me, Kanishka Sarkar and Ankita Saxena. A show where we'll take you through all the stock-specific action that's been happening in the markets and answer all your stock-specific queries with our experts. But Ankita, pretty good day coming in for the markets. We have finally managed to, go past that 24,500 mark, and nearly 120 odd points of uptake is what we are seeing at this point.
Yes, absolutely. The market breadth looks positive, Kanishka. Now remember, we did see a positive upside on the GDP numbers as well. So that was a big positive as far as India's growth is concerned. And that's buoying the sentiment for now. We are above 24,550 levels, seeing a gain of 0.5% coming in at the highest point of the day on the Nifty. As far as Nifty Bank is concerned, we're not sitting at the highest point of the day, but we have actually come off almost 140 odd points from the day's high. But nonetheless, we are trading with an uptick of 0.3%. 199 points uptick is what is coming in on Nifty Bank as well. And sectorally, if you look at the mid-cap space for the broader markets, that one is up in a way. In fact, that's firing in all cylinders. That's up in a way. 1.6% of the entire mid-cap space is buzzing. Especially, look at BSE. That's up in a way 4.2%. Infosys, Dixon, BHEL, Max Health, OFSS, Hindustan Copper, Coforge, all these mid-cap names are trading in the green. In fact, most of the mid-cap basket is trading in the green now with the solid gains coming in. As far as the small caps are also concerned, small caps also seeing an uptick of 1% in trade. So broader end of the market is doing very well. It's outperforming the frontline indices. And sectorally, we have Nifty IT as of now. That is the top sectoral gainer. That's up 1.4%. We have Emphasis, Coforge, Infosys, Persistent, Tech M, all of these trading with gains of more than 1.5%. So again, the mid-cap basket within the IT pack is also doing pretty well. On the losing side, we only have the FMCG pack and Nifty Media, which are very marginally in the red. In fact, they're very, very flat at this point, but they are nonetheless trading with a shade of red right now. But a couple of names that are in focus today, Hindustan Zinc, that is in focus on the back of the fact that silver has hit its 4-year high. And on the back of that, we have Hindustan Zinc that is buzzing in trade. CG Power on the back of that Morgan Stanley coverage that they have initiated. They have initiated an overweight coverage on CG Power. So that's up in a way more than 3.5%. NCC, that is backed an order win. Zydus Life, that is, the unit is going to buy a UK-based company. And on the back of that, Zydus Wellness is in focus. Torrent Power is also in focus. We have also a couple of other names, the other sectors that are buzzing, especially, if you look at the capital market theme, like I mentioned, is doing very well. BSE, CDSL, Anand Rathi, MOSL, all of these stocks are doing very well. After that, those days of decline that we see coming in, the stocks have picked up. In fact, they're seeing renewed interest and renewed buying that's coming in on all these capital market themes. EMS stocks, Dixon, Keynes, and PG Electroplast also doing very well in trade today. So that's how the market construct looks like, Kanishka. It is a positive day coming in. The market breadth is it's clearly in the tilted in the favor of advances, like 2,000 constituents versus just the 700 constituents in the favor of declines.
In fact, it's a very positive day coming in. And to discuss this setup further, we are now joined by Gaurang Shah, Senior Vice President, Geojit Investments. And also on the technicals, we have Forum M. Chedda, who's the founder at Chart Analytics. Hi, gentlemen. Very good morning. Very good morning to both of you. Gaurang sir, let me come to you first. We have a very important GST meeting coming up in the week. We have a very positive handover when it comes to GDP. So a pretty good day coming in for the market. But do you expect this to continue going forward in the week and in the month of September?
Well, first of all, thank you so much for having me on the show. Good morning to all the viewers of ET Now, to all of you all. I think the GDP number last week was a very pleasant surprise, given the kind of headwinds that we were facing, especially that I think not only the GDP number, but the manufacturing index also is likely to report much better going forward from here. In terms of the outcome from the Honorable Prime Minister's visit to China and the SCO, I think there's been positive news flows over there as well. What is the outcome with meeting with the Russian Prime Minister, Mr. Putin, is also something that the markets will be waiting eagerly for. In the backdrop of all this, what I feel personally is that the sell side figure from the FIs should go down a little bit. We had stable rating coming out, 1 upgrade and 2 stable ratings from the credit rating agency, S&P, Fitch, and of course Ernst & Young, that is EY. And along with that, the PMI number, which is likely to be better, and of course the GDP number. So we should possibly stabilize. I think what we cannot afford right now is the choppiness and volatility. Uh, with respect to tariff, I think slowly, day by day, we are putting that into the rearview mirror. Right. Unfortunate, the kind of statements that comes out from the President Trump and of course his cabinet. But I think it's the order of the day. We should not uh, look or think much deeper into all this kind of statements. You mentioned about one important event. I think it is third or fourth. That is day after tomorrow. The GST Council meet. Of course, the Honorable Finance Minister will also be there. Outcome of the GST Council meet and the new structure of the GST Avatar in form of 2.0 should add to the sentiments, and it will make a path very clear, and it will bring in a little bit of stability. So while market would be in a range bound zone, stock specific movement will definitely be there on fallback of all these announcements.
All right, so range-bound market, but stock-specific moves as always. I mean, that is something that we have been witnessing for a while now. But with that, let's get going with the show, and let's get started with all the stock-specific questions that you've been writing to us with. You can keep writing to us on the number that's flashing on their screens right now. Your stock-specific question, the buying price, the holding period, and we'll get them answered by our experts. So keep start sending in your questions, and we'll keep taking them. Now let's get started with all the questions then. Let's get on board the first question. This is coming from Sagar. He says he wants a combo view on Godfrey Phillips. He's holding 3,000 shares at a buying price of 1,020 rupees. Do you see further upside on the stock, or valuations are a bit stretched? Also with GST rationalization, how do you expect the performance of the sin goods sector? Gaurang, let me come to you for this one first. If you could answer, what would be your long-term view?
So before I give views on that, a small disclosure, all recommendations that I'll be giving out in this show this morning is a part of our research team recommendation. Our company, Jurjit or I, we do not have any personal investments, no financial interest, nor any conflict of interest, but we give recommendations to our clients on similar lines. They might have their investment interest over there. So now first coming on to this particular sector, of course, on Godfrey Phillips, we don't have a coverage, so I won't give any buy, sell or hold. But the sector looks to be heading for a little bit of turmoil once we have the clarity, as you rightly mentioned, on sin goods. Believe it is 40%. God, don't know if that's going to be stretched further upwards. But in that kind of a scenario, short to medium term, the sector that is tobacco products, cigarettes. So you have Godfrey Phillips and you have likes of ITC. These are the two names that comes to my mind in terms of headwinds, because of the clarity on sin good tax in the new structure of GST. So there may be troubled times from a short to medium term point of view. But as we've seen in the past, whenever there has been an uptick in terms of any kind of tax restructuring for sin goods, it stays for a while. But after that, I think it gets digested. No specific comments on Godfrey Phillips, but yes, on ITC, we do have a positive coverage.
All right, so that's the view on sin goods related stocks. But moving on to the next query then, Forum, let me come to you. This query is on Oil India. The viewer Nikhil is writing from Noida. He holds 1,000 shares of Oil India at a price of 440 rupees. He wants to know what's the near-term view, what are the charts suggesting, where could we see the stock headed, and at what level do you think can he start averaging?
Well, hi, good morning, everyone, and thank you for having me on the show. So, well, speaking about Oil India, first, since it was Friday was like a monthly end as well, so it was not a very good closing on a monthly basis. Secondly, when we just move back towards on a weekly closing basis also, that is as on Friday last week, that again it was a negative closing for as just like majority of the stocks did. So now if we look at it from a very intermediate or even positional perspective, we may see a bit of a rebound where he can consider switching from the stock. So on the upside, it's capped to closer to almost levels of 420. And meanwhile, can continue to maintain a stop loss below the levels of around 383. So anything below 383 should be moving out, and watch out for 420 levels to consider squaring of the position.
All right, so that's the view coming in on Oil India as far as the technicals are concerned. Let's move on to the next question that's coming in from Coimbatore. This is Dinesh writing in. He says he currently holds 800 shares of Aarti Industries at an average price of 517 rupees. At present, he's incurring a loss of about a lakh, more than a lakh actually. Should he hold or exit the position? What do you see any growth opportunities in the stock? Now, he's not given the time horizon, but Aarti Industries, let me come to you for this, Gaurang. He's already sitting at a loss. What should he really do? What do you see, say, for a period of 1 odd year?
Well, I think it's a challenging trade or investment, to be very honest, because at the price at which he bought the shares, I think the downtake is almost about half the price. What I heard was about 800 plus levels is where this gentleman has got invested. Now, having spoken about that, we have an accumulate stance on Aarti Industries. This is a company that belongs to the specialty chemicals sector. There is also a headwind in terms of what kind of tariff structure are going to come through for specialty chemicals from US if President Trump decides to put tariff on this sector as well. But the opportunity in terms of averaging is very large over here. So my humble request would be that first of all, hold on to it since we have an accumulate stance. The level at which you got invested earlier is fairly elevated from where the stock is trading right now. If you have investable amount, I think it will be a prudent idea to average and bring down your cost to a decent level and then give it a little bit of longish time horizon. Our sense is that specialty chemicals and agrochemical sector, the opportunity for export market is likely to open up sooner rather than later. So that should augur well in terms of earnings visibility, but definitely needs to average given the elevated investment level.
Okay, so that's about Aarti Industries. But moving on to the next query then, Forum, let me come to you. This is MBS Rao writing in about CDSL. He has 200, he wants to buy 200 shares at the current market price. He wants to know whether it's a good time to put his money into CDSL, or do you expect a further downside when he could, add money there? And what's the target to sell in the short term?
Okay, so one CDSL, in fact, has been quite volatile if we consider from, in fact, in this calendar year, in fact, and from those highs of closer to 2,000 or 1,900 odd levels, it had declined almost 1,000 odd. And so we can see how erratically it's been moving. But overall, I think from a long-term perspective, it's a good stock to be into or stay invested. But I would say it's more of a strategic view that he can consider of investing. So maybe if he's looking at buying 200 shares, 100 shares can be considered to be bought at these levels. Since the market yet remains a little uncertain and more volatile, I would even consider watch out for lower levels to add in. So the balance 100 shares, you can watch out for around 1330 to around 1320 levels. So his averaging will be better, and it's not like he's jumping in because the markets today remain positive, so that he's jumping in to buy. So I think it can be handled more tactfully to follow the investments. And from a short-term perspective, I'm expecting CDSL to move back towards 1560. But at the same time, if you say on an intermediate basis, it is more into a sideward direction. So buy now 100 shares and watch out for lower levels to add in more 100 shares.
Let's resume with all the questions that you've been sending us. This one's coming in from Ramya, who's writing in from Chennai. She says she's bought 300 shares of Castrol at a buying price of 219. The price started falling after my purchase, so I'm not sure if I bought it at the wrong time. I intend to keep it for short term, but I don't mind holding it for a longer period of time. Could you please tell me what is the current outlook for this stock? Forum, let me come to you for this. Castrol, she's bought it at 219 rupees, and clearly she's sitting at a loss. What should she do? She's saying she wants to hold it for a shorter period of time, but clearly if she wants to, at least get back a buying price or make some profit, then she is also willing to hold it for a longer period of time. What would be your recommendation?
When we just look into Castrol also, since from the month of April, the stock price was at 188, it went up to 230. And again, in the such markets, you've seen the stock price also declining that far. Now it's also broken the support level. And with today's market being a little stable, we can see the stock price today also just kind of trying to hold up to those Friday's lows. And it's 0.5% up at 198 levels at the moment. I would suggest that it would be better for her to consider take a small loss cost and move out of it. Because even waiting for the longer term or even like for say 2 3 months, there is a very strong resistance near 270 to 220, which is very close to a cost price. But instead of waiting for that long, if you're getting even at a level of around 205 to 207, you take off that and invest in something, or you can put in something which is more into the momentum or it is into the trend. Castrol is currently not at all into the trend. So it doesn't indicate that, okay, it is going to outperform the benchmark. So I would suggest that watch out for levels of around 207 to 208, where she can consider moving out from a short-term perspective. Long-term also, then she can wait for the cost price and she can switch.
Okay, so that's the view on Castrol India. But coming to the next query, this one is from the IT pack on Infosys forum. Our viewer Ekambaria from Hyderabad. They have 75 shares of Infosys at a price of 1,560 rupees. They want to know if it's a good time to average, or do you suggest starting to accumulate more at these levels? You know, IT sector has been quite a top performer. In fact, even in today's trade, it's the one that's leading. So what do you see for Infosys, especially on the charts?
Well, as along with the sector, Infosys has also been very much in sync to the benchmark. And in fact, I wouldn't suggest to accumulate right now, but wait for a weekly closing above the levels of 1550. Let there be a confirmation before you can get in and accumulate more. For now, it remains a good hold. And a very crucial level is that is a support level of 1400. Any breach from those levels should be considered to move out of your existing quantity as well. So accumulation can only be considered above the levels of around 1540. That is, it is also going to take off those levels of 100-day moving average and 50-day. So at the moment, that's acting as a resistance, and hence I'm suggesting that wait for a weekly closing above that, you can consider accumulating. Again, that's from a long-term perspective, because from a 6-month time horizon, the stock price is capped to around 1660. So only from long term, watch out for those levels. Otherwise, for now, it remains a hold of the existing quantity.
All right, hold on the existing quantity is the word coming in on Infosys on the current levels. But let's move on to the next question. This is Partha. He's a senior citizen who's writing in from Kolkata. He says he has 70 shares of Tata Communications, bought it at a buying price of 1,600, and 240 shares of Amara Raja that he's bought at a buying price of 1,090. Need your view about the prospects of these two shares, and further, whether to average at current price, Gaurang. Let me come to you for this one. Tata Communications and Amara Raja. Say for the next 1 year, what do you see for this?
So yes, we have an accumulate stance on Tata Communication, and I think all those companies which are into either providing telecommunication services or infrastructure for telecommunication or enabling telecommunication are likely to do well in terms of performance YOY as well as quarter on quarter. We have an accumulate stance on Tata Communications. So in case if you have gotten at higher level, and if that correction is maybe about 5% or more from your earlier acquisition price, you can definitely average over here. Approximate targets, if I have to put over here by our research team, is somewhere close to about 1,970 plus kind of levels on Tata Communications. On Amara Raja Energy and Mobility, well, again, we have a positive stance on Amara Raja Energy and Mobility. One of the crucial component providers in terms of OEM equipments for auto sector, whether it is two-wheeler, three-wheeler, or four-wheeler, or high-capacity commercial vehicles. We have a buy recommendation here also. In case if your acquisition price earlier is higher, somewhere 5% plus, then at current levels, you can possibly average a small portion in both Tata Communications as well as Amara Raja Energy and Mobility.
All right, so that's the view on viewer Gaurav. He's writing from Bangalore. He wants to know what are the prices at which he should enter HAL and BEL. He hasn't really mentioned a time frame, but these are stocks that experts have time and again pointed out that one should look at for the long term. So if you could help us understand whether or not current levels are good to invest in HAL and BEL.
So price factor is dependent on what is the time horizon. And as they all say, beauty lies in the eyes of the beholder. So if you're a long-term investor, I don't think you need to really try to time and price the investment idea that you have. One thing you need to do is have confidence and take a leap. That is, start getting invested. Now, as far as the defense sector is concerned, we are extremely positive on this particular sector. Uh, I think very recently, most of the companies have been able to get large orders, not only from the domestic front, but also there is a possibility of large orders coming in from the international side also. Uh, the out of the two companies, well, BEL is something that we have a coverage on, and I would say that at least start your investment at current levels. Don't put all your money at one time. Depending upon your risk appetite, deploy maybe 15, 20, 30%, 40%, or maybe even more. And when you get dips because of the uncertainty in the market in terms of overseas news flow, you can definitely go on adding to it. The second question that he's asked about is about Hindustan Aeronautics Limited. Now, it's a very stable and a strong company. Unfortunately, since we don't have a coverage, I won't be able to give you buy, sell, and hold. But I can give you an alternate investment idea, and that is in form of Cochin Shipyard. We have a positive coverage here as well. And my humble request is that if you eventually understand and decide to invest in defense sector, please have 3+ years kind of time horizon for your investment to fructify and give you a meaningful return.
Right. So, as always, Gaurang, the view on the defense names, time is of the essence. At least a 3-year holding period is a must on these counters. But let's get you a story on board that the government has issued a draft rule for 100% FDI in insurance. Now, remember that the move was proposed by the union budget earlier this year to hike the FDI limit from a 74 to 100% in insurance. Now, my colleague Anurag Shah is joining us with more on the draft details. Anurag, tell us, what does the draft entail?
So government is moving ahead on 100% FDI in insurance sector, and draft notification has been issued by government, and in the draft notification suggestions have been asked in next 2 weeks, and suggestions can be sent to Department of Financial Services Secretary. So as per the draft notification, for the 100% FDI, automatic route permissions will be granted, and under the oversight of IRDA. So under the automatic route, companies can come and set up the company with a 100% FDI. And one major mention in the draft is related to the key managerial position directors, that the removal of Indian resident clause in the draft notification has also been mentioned. So it's a big development. That will be completely removed for key managerial persons, the directors and CEOs. The Indian resident clause will be removed, and as it was announced in the union budget by Honorable Finance Minister, so now government has fast-tracked the 100% FDI for insurance sector.
All right, so that's about the FDI. But Anurag, before we let you go, the insurance industry has also written to the Finance Ministry ahead of the key GST Council meeting that we have this week. Players are saying that input tax credit on insurance, that's also very important to pass on the complete reduction to customers, and also that GST on commission expenses should be exempted. So what are you picking up? What are the details on this front?
So, group of ministers has recommended nil GST on life insurance and health insurance premium. But insurance industry, general insurance industry has raised their concern to Finance Ministry ahead of the GST Council meeting. As per the letter written by insurance industry is seeking ITC for passing of the GST reduction benefit to the policy holder. So presently the GST on health insurance and life insurance premium, the term insurance premium is 18%, and government has proposed nil GST, the complete exemption. So insurers are worried about the ITC, the input tax credit, which they claim against the GST received. So insurance companies pay GST on their reinsurance premium, then commission to agents and aggregator, then their expenses on their various rents and other expenses. So on that GST paid, they get the ITC benefit, and it is around 5 to 6% of overall, and it gets set off against the GST received. But after as government has proposed nil GST, so insurance industry is asking that if nil GST is announced, then whatever expenses they are making, like commission expenses, GST should be made nil on that front also. And they have also written that ITC should be allowed for the insurance companies, so they will be able to pass on the complete benefit.
All right. Thank you so much, Anurag, for joining us with the details on the insurance sector. We'll get you more updates as and when they trickle in, but let's get on board. Rupak Dey is the Senior Technical Analyst, LKP Securities Ltd, who's now joining us on the technicals. Hi, Rupak. Good morning to you. Thank you so much for joining us. Let's resume with all the questions that have been trickling in. Now, this one's coming from Prasad, who's writing in from Hyderabad. He says he has 300 shares of Avanti Feeds that he's bought at a buying price of 776. Can he hold it for the next 1 year, or does he need to switch to another counter? Rupak, let me come to you. Avanti Feeds, what do you see on the charts for this one? He's clearly sitting at a loss. What should he do?
I think he should hold for some more days. I think there is a support at 597 or 600. So he should continue holding that with a stop loss of 600 or 597. If it does not fall below 600, then there is a chance that it might move back towards 700 in the short term. So hold at the current level.
Okay, so that's the view on Avanti Feeds. But moving on to the next query then. This is Vinod writing from Dubai. Gaurang sir, let me come to you. The query is more broad-based. He wants you to suggest 3 to 4 stocks that he can invest in for a period of 5 years. What would your top bets be?
It's always prudent to be with the large cap. So let me try to answer his question in form of 5 different sectors. The reason why I have decided to go on 5 different sectors, because I understand that he's a long-term investor. My humble request to him would be that, whatever investment you want to put in these 5 companies, you can start off, but if you have investable amount in future, please add to these stocks. So which are these 5 companies? Well, first one will be from the capital goods engineering space, diversified company Larsen & Toubro L&T. Second one would be a telecom service provider company, that is Bharti Airtel. Third one would be again a diversified company called Reliance Industries. Fourth one would be an automobile company, M&M. And the last one, fifth one, would be a cement manufacturing large cap company with, I believe, one of the largest manufacturing capacities, Ultratech Cement. And I'm 100% sure that all these 5 large cap names that I've mentioned would definitely be on any of the large cap AUMs. And they are the preferred destination in terms of historical track record and performance for long-term investors in terms of their investment and getting return from this particular investment. So 5 diversified large cap companies, and you can do a sip, if you will.
All right, 5 recommendations, L&T, RIL. He says that he wants your guidance on 2 of the better buys for long term. Nykaa, Mascot Docs, whether these are good bets. Gaurang, let me come to you for Nykaa and Mascot Docs. And remember, Nykaa has been doing well. In fact, the new age tech stocks have seen a run-up recently. What is your view on that? And of course, Mascot Docs, again, a name from the defense packs, and the holding period is of the essence, but he can hold it from a longer term perspective. But what would be your call, Gaurang?
Well, so Nykaa, that is FNS e-commerce. We have been positive on this stock. Recently, of course, there was a much better outlook in terms of earning visibility for the first quarter that the number was announced, and possibility of scaling up further. The only caution remains is the competition that is at an elevated level for e-commerce companies. So one needs to be just watch out for that. So we have a buy recommendation on Nykaa, that is FNS e-commerce. Long term, definitely go ahead and buy it. Mazgaon Dock, I don't recollect whether we have a coverage or not. So I won't give any specific. But I've given alternative choice in the question that was there earlier for the defense sector, and that is BEL and Cochin Shipyard. These 2 are well-placed name. If I have to give one more alternative in the new age technology or quick commerce, then Zomato, which is known as Eternal now, is also in a positive coverage from our research team.
Okay, so that's the view on Eternal. But moving on to the next query, Rupak, let me come to you. This is B. Soumya writing from Chennai. She's been holding GMR Airport shares at a price of 80 and Utkarsh Small Finance Bank at a price of 39 rupees. She wants to know what's the expected target for a short-term to medium-term period, and should she continue to hold them or exit at the current levels?
So, first of all, the GMR is looking a bit side. It is moving within a range of 92 and 85. So, on the lower end, I think there is a support at 84. If the stock does not fall below 84 decisively, then it is likely to move back towards 94 once again. Then above 94, 95, then there will be a significant rally towards the higher level. So currently the stock is within a range. A range breakout might give a significant upside towards 116 in the short term. For other stock, that is Equitas, right?
Small Finance Bank.
The other stock looks a bit negative to me. Equitas, I think support is at 50. Sorry, of course, yes. So other stock looks negative to me. The stock has been falling with a lot of low bottom formation. Also, the stock has been sustaining below its important moving average. And in the time it is remaining below 24, I think sentiment might remain negative. I think it's a sale at the current level. Once the stock moves beyond 24, then only add back.
All right, so those are the views coming in on Utkarsh Small Finance Bank and GMR Airport. But let's move on to the next question. This is coming in from, okay, there is no name here. He says he has Maruti Suzuki at buying price of 4,476. Wants to know the long-term perspective. The EV production winter in Gujarat and the time horizon for this is 2 to 3 years. Gaurang, let me come to you. We've recently seen that EV launch that happened in Gujarat in attendance of PM Modi as well. Talk to us about perspective on Maruti Suzuki for the next 2 to 3 years.
Well, so I think as the days go by, we'll have the month-on-month numbers also for the auto sector. We've got some remains to be seen. As far as Maruti is concerned, well, first of all, the investment level, if I heard it right, was 4,200 or 4,500. So that's a big positive as far as this investment is concerned. Secondly, we expect the auto sector to perform well, though there are a little bit of headwinds. But I believe that's a short to medium term hangover. Long term, the sector looks very promising. Along with that, there are policies which are likely to unfold from the government for the auto sector. We have a buy recommendation, so you can possibly, from a long-term point of view, you can hold on to it. If you have investable amount and if you want to increase your investment, you can do that on dips. The flag off of e-vehicle by Honorable Prime Minister Mr. Modi, the reach out is going to be 200 plus countries where Maruti is going to supply this particular vehicle. And we expect furthermore launches in the EV category from Maruti because the work is in the pipeline. So, and of course, the existing models are also doing quite well. So hold on to it and you can add on dips as well.
Coming for Maruti Suzuki, but Rupak, let me come to you for Maruti as well. Now, this viewer, of course, is sitting with a lot of profit. Their buying price was 4,476 and the stock is above that 14,000 level as of now. So do you suggest booking out some kind of profit at the current levels?
I think it's a buy and dip kind of stock. I think till the time the stock is sustaining above 13,000, the stock will remain a very good add on dips. And on the higher end, I think 15,500 to 16,000 should be near-term target, near to short-term target. So at the current level, I think more upside is waiting for the stock.
Okay, more upside waiting for the stock. Perhaps he should be holding on to it, his entire stake in Maruti Suzuki. But let's move on to the next question. It's coming from Jayesh, who's writing in. He's bought 2,000 shares of Hindustan Zinc at 465 for the long term. He wants to know if he can add more at current levels. Gaurang, let me come to you. Hindustan Zinc, in fact, just in today's trading session, that's trading with gains of 4+% on the back of silver that is doing very well. So Hindustan Zinc is in focus today on the back of that. Do you see the positive momentum to continue, and for the longer period, is it a good hold?
Just an offbeat view. A view on gold and silver remains extremely strong as far as our research team is concerned. That is the commodity side. To answer his question, yes, we do have a hold recommendation on Hindustan Zinc. Hold on to it. Approximate targets that my research team has set aside is somewhere close to about 475 plus kind of targets. You want to add to it, I think use dips to add on to it. Today the stock is up 4.5%. Let this excitement just cool off a little bit, and possibly you get dips, you can definitely add on to it. But currently hold on, whatever investment you have.
On Hindustan Zinc, but Gaurang sir, let's stay with you. We have a viewer, Dinesh, who's writing from New Delhi. He wants to know what's the long-term view on Thermax. Is it value buy at the current levels?
Well, Thermax, incidentally, our target price has been achieved. So we have a sell recommendation on Thermax. But if you're keen in capital goods engineering, there are a lot of other names which are there. For example, in the EMS segment, we have a coverage on CG Power. We have coverage on L&T. We have coverage on Siemens. We have coverage on a small stroke mid-cap company called KEC International. And the all-time favorite that I just mentioned a while back, Larsen & Toubro L&T. These would be preferred destination in terms of long-term investment. And Thermax, since our target is in place, we have a sell recommendation.
All right, that was the last question of the day. Rupak and Gaurang, thank you so much for taking the time out and answering all our stock-specific questions. Thank you so much for joining us. And with that, it's a wrap on this edition of Buy and Sell Now. Kanishka and I will take your leave. Thank you so much for tuning in. Don't go anywhere. Markets at Noon is coming up next.